Yesterday, the European currency extended gains and rose above the high posted on March 13th, driven by US inflation data. The consumer price index stood at 6% for the year, ended in February, down from January 6.4%. On a monthly basis, consumer prices rose by 0.4%, also in line with economists' expectations. Excluding volatile food and energy prices, core CPI was up by 0.5% in February and 5.5% on a 12-month basis. All this supported the euro and the British pound. In addition, the rally in cryptocurrencies was back on, with Bitcoin and Ether roaring to their highest levels. After all, statistics allow the US Federal Reserve either to stop interest rate hikes in the March meeting or approve a 0.25 percentage point rate, signaling that the regulator will turn less hawkish amid the banking crisis. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. Traders will receive data on industrial production for February. However, this news is unlikely to have a severe impact on market sentiment. The UK is set to release the spring forecast statement, which may shed the light on the government's budget plan and spending agenda. The focus of market participants will be on US producer prices and retail sales for February. If US retail sales fall, these will exhibit signs of slowing economic activity. In this case, the Fed will have no reason to remain aggressive, as inflation will naturally cool. If US producer prices also drop, offering more evidence that inflation is receding, the dollar will continue losing value against the euro and the pound sterling. Furthermore, traders may take notice of data on retail inventories in the United States. However, this indicator will hardly be of particular interest to market players. From a technical point of view, the 1-hour Euro-American dollar chart shows that 1.0727 acts as the nearest support level. A false breakout at this mark will make it possible to go long, counting on a continued rally to 1.0769. If the price consolidates above this level, the euro will most likely rise to 1.0802 and probably 1.0834. At the levels of 1.0769 and 1.0802, traders may go short amid a false breakout. Short positions on a rebound can be considered at 1.0834 with a view to catching an intraday correction of 25-30 pips. Alternatively, if bullish trading activity at 1.0727 is subdued, its false breakout with a slight advance of 10-15 pips followed by a return to 1.0727 will enable bears to overcome this range by midday. If the price tests this mark from the bottom up, a sell signal will be generated. In this case, the euro will slide to 1.0692. At this level, I recommend going long on a rebound in the hope of an intraday correction of 25-30 pips. If the price breaks below 1.0692, the European currency will head towards 1.0654. As for the British pound, it managed to hit a new one-week high but failed to rise above 1.2200. A false breakout at the support level of 1.2136 will create a buy signal. Thus, the pound sterling will jump to 1.2200. The pair's further movement will depend on the spring forecast statement. In the meantime, the pound-dollar pair is in a sideways correction, which may prolong the uptrend initiated on March 8th. If the price breaks through and tests 1.2200 from the top down, the volume of long positions will increase further. In this case, the British currency is expected to rise to 1.2265. At this level, traders are recommended to go short to catch an intraday correction of 30-35 pips. A false breakout at 1.2200 or fixation below 1.2136 will bring the British pound down to 1.2091 and 1.2048. At the level of 1.2048, it would be a wise decision to go long on a rebound, counting on a rise of 30-35 pips. Long positions at 1.2091 can be considered only in case of a false breakout. Best of luck.